Hey, what's up, everybody? Welcome to another week of Wealth Circuit Investing. And today I have my friend Nathan with me, and we're gonna kick some things around today. I'm moving you to a different monitor here so I can see you better. So anyway, I just thought for Nathan, I thought maybe it'd be a good thing if you could just kind of give us a little background of who you are, and before we kind of get this thing kicked off. So we'll just let you take it away for a few minutes.
Yeah, what's up? Yo, I'm Nathan. I'm 21 years old. I'm a college student. I basically just started college. I stream daily on my YouTube channel and my TikTok, and I'm a dividend growth investor. So most of my portfolio is in dividend growth stocks, like the companies that have little payout ratios that leave so much room for them to reinvest back into the business, do share buybacks. I look for the best total return stocks. So yeah.
Yeah, that's kind of the way I like to do it. So how did you get kind of involved in this area of investing? Is that just like a passion of yours, or did somebody like an aunt or uncle or dad or somebody kind of influence you in that, or did you just come to it, by yourself?
So actually, when I was 17, 16, I started a YouTube channel. It's called Rust Moments. And I was making, when I was 16, 17, like two or 3,000 a month. So I was making a good amount of income. And then after a year of that, after I was making like a good amount, YouTube demonetized my channel. And I went from making a lot of money to legit no money at all. So it was pretty devastating. I'm like, I don't know what to do with this money. I need to find a way so I can invest it, not just keep it in cash, not let it just lose value. So I looked up what's like best way to make money. I found YouTube videos, people like Ryan Williams, Kevin Burgess, and I looked for ways to invest that money. And I found stocks or like dividend, like that's the real best passive income, like dividend income. With real estate, tenants can be a hassle. Something breaks. Hopefully you don't get a squatter. But yeah, dividend stocks are great. And I used to be all in like a covered call strategy. When I was like just turned 18, I've done all the strategies. Like I was all in covered call ETFs. Then I learned like I should go for the best total return assets. I switched my whole portfolio. Like it's crazy. So yeah, basically me losing all my income made me interested in buying stocks.
Gotcha. Man, that's fantastic. Well, I'm certainly glad you stepped into this realm, because it's been kind of fun, chatting back and forth on the Discord and stuff like that as we talk about stocks. So that's really kind of cool. And I thought tonight would be kind of cool because you're 21 years old. You come with a perspective. Your perspective is now, looking forward a long term, right? And
Mhm.
my perspective, I have a big milestone birthday this week, actually. So I'm kind of more, what's the word I should use? Mature, seasoned. You know, I won't say old. Okay, I'll just say mature.
Yeah,
So
it's like your investor profile. You shouldn't have the same strategies that I do. I, I own some more growth oriented stocks like Robinhood, SoFi, Reddit that you shouldn't own probably.
yeah, exactly. So yeah, I think it'd be kind of cool to have different perspectives tonight. So, but hey, before we kind of get started and get rocking, I wanted to, and since we got two people on, I'm trying to learn how to do this. But I wanted to just update everybody on where these AI portfolios have trended this week. So this is from August 11th through September the 8th. The chat, and to be honest with you, they didn't change that much. So the Chat GPT portfolio is now dragging the high end. And then we have the S&P 500 index at 1.91%. So again, that's not terrible, right?
Yeah.
We got NASDAQ now taking over fourth place from the S&P 500. It's now at 1.93%. And Gemini is smoking, man, at 2.51%. Then we have the Wealth Circuit portfolio is 3.35. Now, before today, as of Friday, we were in first place. We had captured first place, but today we kind of crapped the bed. So and then we had the Dow Jones still out in the lead at 3.5%. So it's kind of fun to watch. But
Yeah, the Gemini feature is really cool that you were talking about. And since I'm a student, I actually got a year free of like the Gemini Pro, like, so I just got that for free. So
that's awesome.
yeah.
I just downloaded Gemini on my phone, on my iPhone, and so like for instance, this morning pre-market Verizon was down like 4%. I was like, "There's no news out here," so I went to Gemini and I said, "Hey Gemini, is there a reason that Verizon is down?" And it said, "Hey, based on what I'm seeing, there's no news out there." So I was like, "Well,
I
all
think
right,
it was
that's good."
I think it was the SpaceX EchoStar deal, if you've heard of that.
I hadn't.
It sent T-Mobile down 4% this morning, and that whole sector basically. I think it was some sort of SpaceX EchoStar acquisition news. I don't know.
Gotcha.
That's my guess. I could be wrong.
No, that sounds it's more plausible than anything I had, so that's good. Let's see. Just a quick update on the portfolio. Year to date, the portfolio is 13.35%. S&P is at 11.2. Now these are total returns. Nasdaq's at 1289. Dow is 8.03 and Russell 2000 is at 8.2. So we're doing pretty good, for the year for an old guy. So
wait, my year-to-date return, I'm up 15% year-to-date.
Nice.
15.5% year-to-date in my Robinhood account. So
that is so cool, man.
There's my year-to-date, just to include myself there.
That's awesome. Hey, do you like that better or do you like this better?
Either one. Probably that one more. My camera's a little low quality, I realized. Sorry about that.
So no, that's cool. So you're smoking year to date. So then I thought one thing we could talk about before we kind of go and see what questions people have for us. So that's kind of a hint that if you're watching tonight, go ahead and throw some questions out there for either me or Nathan or both, and we'll just kind of take this wherever you guys want to take it. Okay. So let's talk just a little bit about this stock that you kind of put me on. It's called Cormedix.
Oh, yeah.
CRMD or something like that?
Ticker symbol CRMD Cormedix.
Yeah. So how did you stumble across that, and what do you think about it?
Actually, someone in my live stream told me the ticker symbol. On my live streams, I like analyze stocks very quickly, and I just found this is a very high quality company, and I don't normally buy these kind of stocks. They're only worth $930 million. They only sell one product, but they're a $930 million company. They have $190 million of cash, no debt on the books. That gives them a lot of freedom. It's a huge safety net, no debt at all, $190 million of cash. And they have insane margins. They finally got FDA approved to sell their product. They have like 40 million in sales a quarter. They're making like 20 million of net income a quarter. They have insane margins. So I think they're pretty interesting. So as much as I love them, though, I didn't put a lot of money in them, like $200. But out of all the $900 million market caps out there, this one's really interesting.
Yeah, I agree. And of course, as you know, I followed you into that stock. I bought, I think 50 shares of it. And it doesn't, I was telling you before we started, it doesn't really even show up in the rounding in the portfolio. It's pretty small. But I was like, you know what? If Nathan's jumping into this, I'm going to jump in with him. We're going to sink or swim together,
Yeah, it's like 0.45% of my portfolio. It's very small for me as well. And I'm actually looking to buy more of the position once it goes down more, because that's certainly a possibility.
Yeah, it's certainly not a dividend stock, which is kind of outside of what I normally do. But sometimes you just got to have fun. I mean, investing can't always be about the numbers. Sometimes you just got to have fun. So we
buy some of the more growthy names.
What's that?
Yeah, you got to buy some of the more growthy names with a small amount of money and let them grow into meaningful size positions.
There you go. So now what the Cormedix is their main product prior to this acquisition is a bit of a catheter that's used for what's that? When you have dialysis, right? When your kidneys are struggling and they have to do dialysis, there's a catheter that's used, and they have a patent on a catheter that I guess doesn't have to be sterilized and stuff. It's got all of the components in it to sterilize automatically. So it's supposed to be a pretty good product. I was showing it to my daughter the other night, who is a nurse, and she said that's going to be a good product. So
Well, that's pretty cool.
yeah. So
Their
I thought,
patent
you know,
does expire in 2033, though, which is kind of soon, but it still gives them a lot of time.
yeah, exactly.
That is one of the risks. Another thing is like for that DefenCath product, 60% of their sales are just from like one hospital group, like basically one customer. So they do have some concentration. So that's probably why they're trading at a really low multiple. Like the forward PE is like an 8 or a 9. It's really low.
Gotcha. So another thing I want to ask you before we kind of go to what folks are saying out in the chat is how do you? I mean, you know a lot about a lot of stocks, and so you know I sit there and go, how does a guy who's 21, who's in college, who's got classes, who's got a lot of stuff going on, how do you spend the time to learn about all that's going on? And I mean, it's obviously a passion for you, but sometimes we don't have time for our passions, right? So how do you find time to do all that?
Well, a lot of it is me learning as I'm doing it on my live streams because I'm streaming I stream pretty much every day for multiple hours, usually 2-3 hours, but I enjoy doing it. Like, if I went on my phone and showed you how much time I spent on these Webull and these certain apps where I just analyze stocks all day, see which ones have great financials, it's unhealthy. So I probably spend way too much time looking at stocks, but I really enjoy doing it. I love looking at the cash flow statements, the balance sheets, how are they making money? Like what happened? Why is the stock going up so much? Why is it going down so much? It's usually explained by the financials. So I really just enjoy doing it.
That's awesome. So now what is your degree going to be in, Nathan?
I'm majoring in business admin right now, but I'm thinking of just switching it to finance because right now I'm just taking all the like basic entry level classes that I'm about to take accounting 1, but that's next year. So that's when I'll take the serious classes. But yeah, business admin is what I'm majoring in right now.
Gotcha. So that's kind of right in your wheelhouse, right?
Yeah.
That's awesome. That is fantastic. So well, let's go and see who all is on the program tonight. And let's see. We've got Mr. Income is here. He says it's good to see you joining tonight, Nathan, and I agree with that.
Yeah, good to see you, Mr. Income.
Then we have Steve, who must be in Mexico, but because he's saying hello in Spanish. So, hola, mi amigo.
What's up, Steve?
So Billy, I'm looking forward to the show as well, my friend. And you're just now, Billy's over, I think, in the Philippines. So he's just now getting up, having a cup of coffee. So we are beginning his day, but we're ending ours, if that makes any sense. We got El Dynamico. Antonio is with us. And yeah, long time no see. I don't know if you know this or not, but El Dynamico is a vision impaired. So that's why he puts ha 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 at the end of that. So long time no see. So Michael Swami, it's always good to see Michael here. Michael always kind of keeps me straight when I screw things up because, on a live broadcast, you start to say things and you go, well, wait a minute. I've forgotten more than I knew about that. So we got my buddy Ryan. Ryan is on the broadcast tonight. That is awesome. Good to see you, Ryan.
The homie himself.
Yeah, the homie.
Delighted.
Yeah, that's right. So yeah, 900 million market cap, one product. Don't bet the farm. That's actually good advice, Michael.
Yeah.
Yeah, and I think you heard both Nathan and I talk about that. It doesn't even round to 0.01. It doesn't even round in my portfolio. So it's just for fun, If I lose it all, I would have spent that much taking the wife out to a nice dinner or something,
And if you do an X cash market cap, they're really you're really buying like a $700 million company because they have $190 million cash, no debt on the books. Pretty cool. take some risk off the table.
Yeah, we got Pat here from the Upper Peninsula of Michigan. So is this a dividend stock, or maybe it is definitely a growth stock, El Dynamico? It is
Risky growth stock.
Yeah. So again,
risky growth stock. Yep.
Yeah, definitely a growth stock. So it is something that you should not invest in if you haven't done your due diligence. Nathan and I, neither one, are recommending that anybody buy this stock. We are just kind of having a little fun with it, and we thought we'd share that here on the program tonight. Although it's so small that we probably could just buy it. Should we just buy it?
Yeah, exactly. We could raise the funds, and we have the funds.
We'll borrow some money from Ryan.
Yeah, we'll take out equity out of your honey business.
Yeah, that's right. Yeah, that's a sticky business right there. So Ryan says your enthusiasm for stocks is intoxicating. It really shows when you speak. Great job with everything you're doing. I think that's fantastic. I agree.
I really appreciate you, Ryan. I do appreciate that.
So that's cool. All right. It looks like we got our first stock of the evening, and that is UNH is starting to show its colors. So what colors would those be? What do you think about UNH, Nathan?
Buffett just bought a bunch of it. He doesn't buy stock unless he usually does his due diligence. He did buy and sell Ulta, but he usually doesn't buy stock unless he really does his due diligence. So that's why it popped up on that huge day. But it is a bit risky, with the pending litigation, the DOJ stuff, overbilling the federal government potentially. But I think it's mostly priced in because the net income is expected to fall a bit. Like in 2 quarters, the analysts are expecting them not even to be able to afford the dividend, which is unfortunate. So there is some risk there, but I think it's pretty close to, I wouldn't touch it really over 300 meaningfully. It's like 315 right now. Probably under 300 is where you want to meaningfully buy. But even then, I wouldn't have it as a huge position. But it is really interesting. Largest player out there.
Yeah, I agree with that. I think, I like United Health. I have owned it. I bought it when I thought it was really cheap, and then it went way up, right? I was almost double, and then all of a sudden it crashed, and now I'm not. I'm underwater on United Health, but I think long term it's a good buy. I think if you're looking to get into it, we had a discussion about this in the Discord, and that's a great segue to say if you want to be in the Discord, it's in the notes in this video. So
yeah, please join Kevin's Discord. It's so fun in there. I'm on there like every day.
yeah, me too. So me and Nathan are in there. Mr. Income's in there. There's a whole lot of folks that play around in there, and we just like to talk about stocks and stuff like that.
Yeah, we post our daily portfolio returns. It's pretty fun in there. So
yeah. And it's kind of cool because not that we really care from a day-to-day basis what our portfolios are doing, but sometimes for me, I'll just say that for me, when I come in and I say, hey, my portfolio lost for the day, and then I see a lot of other people that lost as well, I'm like, hey, misery loves company, and it's kind of okay, right?
Makes you feel better that everyone else around you is doing bad.
Exactly. So, but yeah, I think so. UNH is a hard one for me because I do own. It's actually it's a bit overweight in my portfolio, so I'm not buying UNH because it's already overweight in the portfolio. But I also think that there's a potential we could get it cheaper if there is another shoe to drop with the DOJ. But we could also, it could be a nothing burger as well, right? And then all of a sudden the stock goes back up. So it's really, what do you believe about DOJ and what do you believe they're going to find? And so it's really, I think if you're going to get into it, now is not a bad time to do that. But if you get into it, just realize it could take a hit at some point. And that may be a time to buy some more. I don't know. Or it could be a great way, DCA, dollar cost averaging, might be a good approach as well. So those are kind of my.
If they take a hit, Warren Buffett's taking the hit too.
Yeah, that's right. Yeah, misery loves company, right? So yeah, we'd love to have Warren's going to lose more than we do. I can guarantee you that.
And they got a decent yield too, like a close to 3% yield, right?
Yeah. Yeah.
Hey,
Yeah.
my parents, they use OptumRx. We're a customer.
Yeah.
So.
All right. So let's see. Yeah. So Michael corrected his post and said, "Don't bet the farm." It's now "Don't bet the bees." So that is right. I wouldn't put those bees at risk. You know me better than that, Michael.
Well, that's before the acquisition or the merger. That's before the merger.
Yeah. Yeah, that's right. All right. So we got Oscar is in the house. Good to see you, man.
What's up, Oscar?
And I don't know if you know Shannon, but Shannon from the beautiful state of Georgia is on.
I'm from Georgia too.
Are you? Is
Yeah.
that where you live now, or you just from there?
I've lived there. Yep, I've lived
Okay.
here for 6 years.
Awesome. Yeah, Shannon's in Atlanta, I think. So
I'm pretty close to there. I'm like north.
Okay. Fantastic.
North
Awesome. Here's a great question. Ryan Williams, have you guys ever looked into WD-40? What do you think of WDFC? You ever looked into them?
Are they a one product stock? I wonder what their market cap is.
Pretty much. It's
actually never, I don't think, looked at them, and I've looked at a lot of stocks before.
Yeah.
But that's a basic commodity a lot of people need.
It's that stuff that stops doors from squeaking, you know?
Mm-hmm. Yeah, like a lubricant kind of thing.
Yeah, so let's take a look at
they pay a dividend?
Yeah, I think they do. Yeah, it's a 1.73% yield, which means that investors are giving it a bit of a premium, right? Because that's a below market yield, I guess. Maybe it's not. I think the S&P is like 1.4. But anyway, it's roughly a market type yield, which means that they believe that there's some growth associated with the company. And we can see that their dividend, you can see that, right?
Yeah.
We can see that their dividend is pretty consistent. It's grown over the last 5 years, 7.6%. Latest was
that looks great.
Look at that line right there, man. So that's fantastic. Ryan, I need to add them to my model, but I have looked at them before. It's been a long time. So I thought I would just take a look. And so according to what is this? Simply Safe Dividends. They are reasonably valued, maybe undervalued. So it looks like it's not a bad time to get into them. The earnings payout ratio, though, is a little bit high for me. Look at that free cash flow payout ratio in the next 12 months. They may be making an investment in capital that would drive that, because it's certainly not showing up in earnings. So that's probably going to be some kind of capital outlay.
I'm looking at the sales. The sales are only up 1.5% year over year. That's not too great.
Yeah.
Just revenue, organic sales, barely beats inflation. But I like those share buybacks. Looks like their shares are going down every year.
Yeah, we got a pretty high return on invested capital as well, 21%. That's pretty nice. Pretty low debt to capital. Interest coverage looks really good.
Well, explain to me interest coverage, like, very simply again. I always is that like how many? Can you explain it like really simply for me? Interest coverage?
Yeah. So what interest coverage does is it takes the interest that they pay on their debt and it divides it by the net income. And so basically what it's saying is how many times could they pay their interest on the earnings that they make as a company. So if it's 26.7 times, that means their earnings cover their interest by 26 times.
Oh, so okay. Thank you. That's great then. That's a good number.
So that kind of it's a metric that I like because it gives me a sense for whether the company it can manage its debt load. You know what I mean?
Yeah. Yeah, I don't like companies with a lot of debt, like where the interest, like especially in this high interest rate environment, it's tough. I like the companies with no debt, lots of cash, where they're earning interest on their cash every quarter. They have net positive interest.
Yeah. Let's take a look at Fast Graphs. Morningstar didn't have anything on it, so
Oh no, like Morningstar analysts cover it.
no. They had that quant rating on it. I just don't trust it. And then we'll do like a 10-year look. So yeah, I mean the price is a little bit below its last 10-year PE ratio. That's not too bad.
Their historic PE is pretty expensive.
Yeah, it is. It always has been, though. I mean, take a look at that. I guess back here in 17 it wasn't, but let me just go back to Max. Yeah, if we'd bought this thing back in 05 and 06, we'd have been smoking right now.
Oh, yeah. I want to see the growth come back to the sales, for that high multiple, 1%, 1.5% sales growth year over year. I'd like to see a little more than that. So I'd probably put them on the watch list. That's definitely interesting. That's a commodity pretty much everyone has in their garage, WD-40.
Yeah.
I'll put them on my watch list, watching to see if they'll fall down a little more. I don't know if I feel too comfortable paying right now multiple, but that yield is very nice and it looks very safe. 1.7% yield looks good.
Yeah, I think it's certainly worth looking at. I agree. I think I'm going to add it to my model just because I need
$3 billion market cap. Huh. WD-40. I thought they'd be worth more than that. I don't know why.
Yeah, maybe at some point an acquisition might be good for them as well, just to kind of broaden themselves out a little bit.
Yeah, that's a great way to return money to shareholders. I love companies that do that synergistic M&A where it's accretive to their EPS. I love that. Amphenol's great at that.
Yeah. So Ryan has that for kind of a non-committal answer. I think we like it, but we want to spend a little time with it. We want to get to know it. It's kind of like if you invite somebody out for a cup of coffee, if you invite somebody that you like out for a cup of coffee, and at the end of the coffee you say, "Hey, I want to get married," right? It's you just want to get to know the person a little bit more than that. And so that's kind of the way I feel about WD-40.
Take me to dinner first.
Yeah. Yeah. Just need a nice dinner or something, All right. So let's get rid of this. There we go. So anyway, great question. Great question. Oh, here we go. This is a good one. So first of all, Billy has a full position of UNH, but he's adding to ELV, Elements Health. And that's kind of the way I've gone as well, Billy. I've got kind of a full position, actually overweight on UNH, and I'm a little underweight in ELV, but I kind of look at them both together as like that being exposed to that sector. So I've got as much of those as I really want, and just waiting for them to turn around at some point.
Yeah, the analysts don't have as harsh of a decline in EPS as UNH does. ELV's like next year's net income looks pretty solid versus like the decline UNH is expecting, which is probably temporary.
Yeah. There we go. Here's a good question for you. What's your favorite dividend stock?
That's a tough one. It'd probably be a dividend growth company, probably like a Carlisle or Google. Like it. That's probably that's not a real dividend stock because the yield is sub 1%. But if I had to pick a higher yielding one, I don't know. Probably a REIT. Probably like, I don't know. I own Main Street Capital. Main Street Capital is a great monthly payer that I own. They're trading a bit expensive, but they've been a great performer for me. One of the few monthly payers, Main Street Capital.
Yeah, I like Main Street Capital.
That'll be my high yield answer because they've seen some surprising stock price appreciation for a BDC.
Yeah. Yeah, they are my favorite BDC. I used to own them, and then I sold them for some reason. I think I had to pay my taxes or something. And
they're trading at like 2x net asset value, and that's what you like value BDCs off of. And for the industry, they're trading at a super industry high net asset value multiple of like 2 or 2 plus or something. So I'm not adding to my position. I'm up a nice like 19%. So I'm just not adding to my position. I'm gonna just and they're in my Roth IRA too. So I own them in my Roth IRA, so the dividends are also tax free, which is pretty cool.
yeah.
But even in a taxable account, a lot of people don't know if you make under 55,000. Not financial advice, of course, but this is what I saw. Long-term capital gains are taxed at 0%. So you receive a dividend from like McDonald's in your taxable account. It's completely tax-free, even in your taxable account.
Yeah, that's awesome. Yeah, I unfortunately can't take advantage of that, but it is awesome.
Yeah, I make minimum wage basically.
Yeah. No, that's great. Yeah, it's like tax-free
But I
living right
invest
there.
most of my income.
Yeah, man, that is fantastic.
But taxes really favor investors. That's what's so great.
Yeah.
Especially the low income investors, because it's almost better than a money market fund. You put your money in, I don't know, boring Verizon or AT&T, that 4%, 5% you're getting is tax free versus a money market fund, which short term capital gains.
Gotcha. Yeah, I think that's right, and so there's one of the benefits we have is that if our stocks go up, then we don't have to pay taxes on it till we sell it, right? So
Exactly.
That's one of the great benefits that we have is just letting that stuff grow. So fantastic. So hey, what do you think about Badger Meter?
I've only heard about them from Ryan and Ari's little discussion about them. Apparently, they do like water meters for houses or something very niche like that. That seems very interesting. I've yet to look in them in their financials, but seems very interesting, really. Like it's always those boring companies, like the Rollins that Ryan talks about. Like they do bug spray and termite repellent. They're very boring, but it's those boring companies that do great.
Yeah, exactly. Yeah, I've been watching Badger Meter for quite a while. It is on the watch list here. I'll show this. I got to make that much bigger, don't I? So it's on you see here on my watch list. I've got it as a hold. It's 0% of the portfolio. My model says it's going to be an 11% return, but analysts are saying 33% return. Who's right? I have no idea. We'll just have to wait and see. Morningstar has it as a narrow moat. It is actually trading above its fair value, about 15, 16%. And it's also got a good return on invested capital. So dividend safety is 94. Dividend yield is 0.9%. They don't have any buyback yield. And but I think it is right now. It's ranked number 39 in my list. So there are other stocks right now that are more attractive to me. But if this were to change, if the price were to come down a bit, I might play around with the Badger Meter. I put it in my watch list in this model because I like them. I like the company.
Wonder what their market share is. Is that what they do, like water meters? Or
yeah, I don't. Here, let's pull it up.
I usually like looking at their investor presentation. Usually they, put lipstick on it to make it look good, but I still like looking at it.
Yeah.
BMI.
So here we go. Founded in 1905. It manufactures smart water metering systems and flow measurement technologies used by municipalities, utilities, and industrial customers. That includes smart water meters, flow sensors, and software solutions that help monitor water usage, detect leaks, and improve efficiency in water management. I think there's a lot to that. I think there's a lot of untapped market there, just like I think there is also in the electric side. I think that we just don't know Having worked at a utility for 21 years, we don't know exactly where that power goes, right? It goes
And
out on
also,
the, it
this
goes out
sounds
on
like
those
some.
lines.
Oh, sorry. It
No,
sounds
go
like
ahead.
something that can't get replaced by AI. ChatGPT can't replace, having to replace your water meter and seeing your water intake and stuff. So,
Yeah. Yeah. And their meters might provide the data that AI might could use, right, for something.
oh yeah,
So,
help you be more
so
efficient.
yeah, if we don't have these smart meters, then AI can't use it. It can't use the data because it doesn't have it. So, yeah, I think there's a lot of potential there, Ryan. I think you're onto something.
Yeah, it seems like a niche, interesting company.
Yeah, I think it is too. So Oscar says, "Nice to meet you. Great to see another investor grow and talk about investing. Wish you the best, Nathan." That is awesome.
Yeah, I appreciate that, Oscar.
Ryan says his wife is watching this with him, and as they're cooking dinner. What are you having for dinner, Ryan? We all want to know. And she says that she also does not like companies with a lot of debt. That is great. You must be sharing some of your secrets with her, because that's a good position to have. That's great.
Yeah, let us know the dinner.
Yeah. So let's see. Here's a good question for you, Nathan.
Oh
Do you
yeah.
think an interest rate cut will hurt Main Street Capital?
Theoretically, yes, because they're going to BDC to get access to capital, and maybe when interest rates are lower, they can go somewhere else to get that capital cheaper. So, in the long run, yes. So, interest rates being high this long has kind of helped them out, but I'm not worried about that though, because or I wouldn't buy it at this price, but I'm just holding on to my position. But I do think so. Like just kind of logically, it would eventually.
Yeah, I think I think it's really going to be hard to tell, um, because I think one of Maine's real values is the way they work with the management team and building a strategy, right? So they're not necessarily a loan company. They're really more of a management consulting firm that also provides some financing. And so I think you're right. I think it will have some impact. I just don't. I don't think it's going to be like. It's not like that's all they do, right?
That's actually good to know. I thought they just did like first lien, second lien loans, and like just that. That's in like preferred equity and stock. That's good to know. Actually, that
Yeah.
that, that does make it a bit more resilient to the interest rates. I
Yeah.
like that.
Exactly. Yeah, one of the values they have is that if they can get these companies to grow like crazy, then they also have an equity stake in that company. So part of it is that they get an equity stake, and as that equity grows, they grow as well.
They
So
capture that upside. I like
exactly, exactly. Rollins is a beast. His great white whale.
Man, I wish I could find that stock at a good PE that I'm comfortable paying with, but I don't think they'll ever get down there. They're like a Palantir. They'll never get to a valuation I want to pay at.
Yeah, that's awesome. Yeah, Rollins. My buddy Ryan's been beating that Rollins drum for a while, man, and
Should have listened.
he's been right on.
They got a nice yield too.
Yeah, Michael wants to know if there's a moat for BMI.
I wonder what their market share is. Like, I wish I could help answer that question, but I just haven't done the research.
Yeah, I haven't done enough research on it either. Let me see if Morningstar covers them, and they don't. So yeah, I don't know. I haven't done enough research on Badger Meter to know if they have a good moat or not. So if anybody else knows,
Yeah.
put it out there for us. And it'd be interesting to know if if it's their own design. If they have the what is it called, intellectual capital associated with these meters,
Oh yeah, like
right?
maybe they have some patent or IP, yeah,
Yeah, yeah.
or only they can make this most efficient water meter, or I don't know. That's some research we got to do. That's interesting. Yeah.
Yeah. So I mean, that would be a way I would see that they could get to, some kind of moat, is if they have some, IP associated with the meters that they're putting in place. So, but other than that, I don't know. All right. Let's see what else we got here. Ryan is having turkey burgers and salad. It sounds delicious, but it sounds kind of boring, my friend.
And
Yeah,
that sounds really healthy, though.
yeah, that's right. You enjoy dinner with your wife, man. I appreciate you stopping by.
Yeah, thanks, Brian. I appreciate you.
All right, Michael says Maine could benefit from rate cuts if it increases their spread. Yeah, that's
I hope so.
yeah, it's certainly a possibility. So, hey, what else do you want to talk about? We've run out of comments here. My friends are letting me down.
Oh, we could talk about McDonald's and how they're a great company.
I think we should.
And
That's
y'all know
like your thing, man. Take it
I
away.
love talking about McDonald's. I'll give you a quick pitch for the stock if you want, but
Okay.
McDonald's is legit. Like, I call them recession proof, but they're really like recession resilient. But in my eyes, recession proof. Like in 2008, them and Walmart were the only positive stocks in the S&P 500. During a recession, historically, McDonald's sales go up. People stop going to maybe Starbucks and Chick-fil-A, and they go to McDonald's to get the value. And they finally brought the value back. Like, you actually get good deals at McDonald's now. But even in a recession, what they do is they acquire a bunch of cheap land. So it's so smart of it. They're really a real estate royalty company, if you didn't know. You go spend $100 at any McDonald's, $4 of it goes back to the parent company. The stock is a royalty, a sales and marketing royalty. Some of the new stores actually have a 5% royalty. And also, they own the land under 80% of the stores. So even in a recession, the franchise is taking all the risk. The parent company, that's how they have a 35 to 40% net margin, or they have like a 33% net margin, but no restaurant should have that margin. That's because they're not a restaurant business. So they collect the royalties and they collect the rent every month, even if the tenants aren't paying, or even if they're not making any money, they still get the rent. Pretty cool.
Yeah, that's pretty cool. They ring the register no matter what, right?
Oh yeah, and they get the high margin, royalties. It's crazy. I love it. So they're a nice dividend growth company. They're like my third largest holding. They have like a nice 2 to 2.5% yield. You should get like 2.5% in a dividend, 2% buybacks, and then 2% same store sales growth. This should underperform the S&P 500 in the long run for sure, but it's definitely a nice addition in a diversified portfolio. That if tech does kind of start to sell off, I think McDonald's is in a nice position where they won't fall as much. And maybe you could use it as a cash and cash equivalent where you buy it now, collect the dividend. When tech stock goes down, you could sell it and buy it. But I just recommend holding McDonald's forever. You could never sell stock.
Yeah. Shannon here is asking, I was going to ask the same question. What's your largest holding?
It would actually be Comfort Systems, ticker symbol FIX. It's that heating. They're an HVAC company. They do electrical work too, plumbing. They service over like 12,000 buildings. And I had them. They were initially like 8% of my portfolio, but they've done so good. I'm up, I believe, like 99% right now. That it's grown to my largest position. It was originally Carlisle. Carlisle was my largest position, but Comfort Systems took it over and gained it. I haven't taken a single dime of profit on them. I'm just keeping my shares. But yeah, Comfort Systems they're raising their dividend quarterly right now. It's pretty crazy.
Wow.
I don't see many companies doing that, but their payout ratio is like 8%. It's pretty low. But yeah, Comfort Systems has been an incredible performer for me. My favorite stock probably.
That's awesome. Yeah, they're in my model as well, and they're actually rated pretty good. Let me kind of see where they are now that I can.
They've seen a lot of growth from the tech industry, like Bitcoin mining rigs and data centers that need, it's recently been unpopular for them to do like water cooling because there's a lot of conspiracy around like one ChatGPT search takes one bottle of water worth of water. So what they're doing is installing these like cooling pipes right into the server racks, which is pretty interesting.
Yeah.
But that's just like one portion of their business, but yeah, that's been the super growthy part. that's led to incredible margin expansion. Everything is perfect for that company. No debt, pretty much like 0.08 times uh, debt to interest or debt to net income. Pretty good.
Gotcha. Yeah, so here's where it kind of fits in my model. It's actually the number 8 stock in the model. So it's one that is close to being. So the issue that I have is my model calculates that it's going to have a nice return, but the analysts are saying it's a 1% deal.
Yeah, there are many analysts on this one. They're kind of very not talked about stock.
Gotcha.
Kind of a diamond in the sand.
And Morningstar has it way overvalued, but it may be that they don't cover it.
I do think right now it's priced. I certainly wouldn't pay it. I wouldn't buy anything close to where it's at today.
Gotcha. Yeah.
Because I'm up 100%. I just let my shares just ride. So I love the company, but I wouldn't touch it really right here. The forward PE is pretty fair though for how growthy they are.
Yeah, I don't know what it is.
I think it's like a 30 or a 32.
Okay.
And the EPS growth is nuts. Like you won't believe it if you look on Simply Safe Dividends. It's crazy.
Yeah, their return on invested capital is 34%. That's fantastic. Dude, I cut one of my pastures today, and it was so, we've had some rain, but it was just dry and dusty, and all that stuff got in my eyes, the grass clippings and stuff. So I've been putting this allergy drops, in my eyes, but they are still bothering me. So.
Oh, that sucks.
Yeah, it's all right. It's part of getting old, I think. All right, so go ahead.
Oh, sad, short little story. I know someone who was just at the beach, and a really fast piece of sand hit his eye, and now he has to get like surgery on it. He can like barely see out of it just from a super fast piece of sand. Like that's so unfortunate.
Wow, that's so random, man.
Yeah,
that's crazy. Let's see. There's a couple of questions, and we'll just kind of lump them together about upcoming rate cuts. Michael wants to know if there's any sectors, and then Sam Horizon is wanting to know what stocks we're looking at in anticipation of the rate cut. What do you think?
The REITs and the BDCs look pretty interesting. I like the home builders, like a Carlisle. Well, they're not a home builder, but they trade like the home builders. But yeah, like Pool. Warren Buffett has been buying a lot of this. Maybe he sees something, but he just bought Lennar, D.R. Horton, Pool. So probably those kind of stocks. The home builders look very interesting. They always trade at low PEs, and you get great yields on them. They do crazy buybacks. So the home builders, I like Carlisle. They do roofing. They should benefit, but the REITs too. And McDonald's somewhat trades with the REITs. I know they have a big real estate portfolio. If they were to convert to a REIT, it'd be in the top 5 largest REITs in the U.S. Sorry for me going back to them. But the REITs I look pretty interesting too. Maybe like a ADC or something.
Yeah, like an Agree Realty or something. Yeah. I think you're right. I think all of this, any kind of construction, I think is going to do well because it's going to make loans a lot more affordable for not only residential but commercial and industrial as well. So, CSL, Carlisle, or maybe not so much the Home Depot and Lowe's. I think we'll probably be looking at more new things, right? Rather than fixer-upper things. But it's not that they're not going to benefit. It's just not going to be as much, I don't think. And
also, when we go into a lower interest rate environment, we should see some people, like a lot of people keep their money in the money market funds. Well, those yields will go down, and maybe they'll switch it to stocks, maybe dividend stocks or maybe just growth stocks. But some money should flood in stocks.
It's a rising tide raises all boats, right?
So,
yeah, that's good stuff. So then I think some other sectors might be, and you mentioned like the BDCs, the REITs, anything with a high capital intensity, utilities, I think will have some benefit. So anything
maybe
like that,
loan, like a Rocket Mortgage, a Mr. Cooper. Those mortgage companies should do good.
Yeah, because they make their money not on the rate itself, but on the additional volume, right? So as all that volume, hopefully, you have a lot more transition of properties with all that volume. Those companies would do well. Yeah, exactly.
But there should be a lot of refinancing happening for mortgages.
Yeah. Here's a good question for you. What sector do you not invest in?
I actually, just because of my age, I don't invest in REITs. Well, I own one BDC, but it's a very, very small position of mine. I also, this isn't really a sector, but I don't touch the covered call ETFs. I don't touch crypto, and I don't touch options just because I'm not good at that stuff. I mainly just buy and hold for the long run, great dividend growth stocks. But yeah, probably something like a REIT, just because of the high yield and the total return. For my age, I don't think that's appropriate for me yet.
Yeah, it's good. Good. I think that makes total sense too. I mean, you're not needing the income right now. You're trying to grow your portfolio, and if you're trying to grow it, you want to stay on the growth end of things. And REITs are great. They have a place. You would think I would own REITs, but I don't. Matter of fact, I put a dashboard together. Let me get to that. This will be. Hold on a sec.
When I turned 18, I used to legit just own REITs and covered call ETFs. I used to just be in that whole strategy.
Is that right?
I was 18. Yeah, I'm 21 now, and I've completely swapped my strategy. I used to do that. And then I'm like, I'm reinvesting these dividends anyway. It's not right for me at this moment.
Yeah, I think that's right. So I got to make this bigger again. So take a look at this. So my portfolio yield is only 1.74%. Now my yield on cost is 2.3, but the portfolio yield is only 1.74%. So for a guy who is actually retired, that's a pretty low portfolio yield, which means I've got, I'm more on the growth end as well. So.
Yeah, most people your age would probably be in a more closer to 4%, like an SCHD type yield. Something more comfortable. But you're lucky you have you don't need all that income right now, which is great. So you can go for a more growth oriented strategy, and then when you do need it, you can convert it. You'll be making much more because you pick growth now. You'll be able to convert it eventually to those high yielding stocks and make a lot more.
Exactly. Yeah, no, that's exactly it. So, see, I'm just so impressed with the way you think through stuff and approach stuff with the not only the market, but also just the thoughts around why to do what we do. Right. So you're going to do so well, man. I'm excited to see where you go from here. So let's see what else. Let's see. Steve wants to know, what about the food product stocks that have been down so much?
Like a Hershey, a General Mills.
Yeah,
they've been hurt bad. I want to almost talk about one specifically. I don't know about the whole sector. Like a lot of Hershey's has been hurt from the cocoa. General Mills is just plummeting the growth. Dr. Pepper's seeing its troubles. I like Pepsi here. Pepsi's a pretty decent one. I like Pepsi. I love Coca-Cola. Coca-Cola Consolidated, that company as well, has a bit of a lower yield, but they're the bottling company for Coca-Cola, one of my larger holdings. But I think Hershey's is decent here.
Yeah, I think Hershey's a little different from the rest because they do have that supply issue with cocoa. And I think when we see in it, I'll be honest with you, I thought that would already be fixed by now, but they just, they're going into another season with some issues. So it is what it is. Yeah.
I really like Mondelez. I love their brands. Mondelez looks like a very high quality stock.
Yeah.
They have premium brands.
Mm-hmm. Exactly.
They got that Toblerone chocolate Oreo.
Yeah, Oreo is my favorite, man.
Sour Patch Kids.
Yeah, so my granddaughter was here, and they had the grocery store, local store. I don't. It may not be local, it might be national. We use Publix here, and
Hmm.
so they had buy one get one sales every week, and so they had these cookies on sale. It was Oreos and what are those peanut butter ones? The red,
Reese's.
no, the red package, the
Oh, Nutter Butters.
Nutter Butters, that's it. So they had Nutter Butters and Oreos. So I got a package of each, right, and brought them home, and that was her thing, right. So every time she leaves the house, she wants to go get some of those red cookies. Well, tonight I was out; we didn't have any red cookies. It was not very good. I don't know how I got there, but so Steve wants to know: do I sell wax or candles made from the beeswax? I don't right now, Steve. I am saving the wax because I know winter is coming and I'm going to need something to do. So I've actually taken the wax and I've frozen it, and so we'll see. I may you have to kind of clarify it, get all the dirt and stuff out of it. So I think I'm going to play around with that. I'm actually building a business plan for next year. I'm going to expand this whole honey bee business next year. So
Did you have a
I,
really good sale today?
I'm sorry.
Didn't you have a really good sale today in the
I
bee
did.
business?
Yeah.
Yeah,
So
he's been making progress.
yeah, we had a nice little sale of honey today. I drove around to my grocery stores, and then there's this guy who bought a large bulk order from me today as well. So, yeah, so it's going really well. So I'm pleased with it. But yeah, next year it's gonna get a lot bigger. I don't know that I'm gonna get into wax too much. I just don't see that there's a lot of demand for it. I know they make that lip balm. The beeswax lip
The
balm.
Burt's Bees.
Yeah, Burt's Bees, but I don't know. I don't know, but I'm gonna give it a shot, man. I'll let you know.
And then the year after is the IPO.
Yeah, yeah. Well, IPO. It's called Dixie Sweet. We'll IPO Dixie Sweet. You guys will be on the ground floor, man. I will. I'll grant you some shares. How's that? All right, Vici. What do you think about Vici?
Oh, they're a good yielder. I know some of the Vegas hotels I've heard like have been struggling and haven't been making much money. Like Caesar stock, they're publicly traded. They're a big tenant for them. Like MGM Resorts. I like the position Vici's in though. They own like the Las Vegas Sphere, the land under that. They do the triple net leases for all basically the casinos in Vegas. So depends on how the casinos are doing. So I do like them though. They're one of my probably top three favorite REITs. Very
Yeah,
safe yield too.
yeah, that's awesome. And then Oscar wants to know about Hess Midstream and OKE. I think that's Oneoak, right? Those are kind of
Uh, I've heard of them. I know you're the oil and gas stock expert.
let me see. I think OKE is Oneoak.
It's like one okay, or
Yeah,
yes,
one OK. Yeah, I think it's
that's how
pronounced
I pronounce it.
Oneoak. But yeah, I always thought it was one OK for a while too. So yeah, I mean, the analysts see a 30%. Let me show this so you guys will see what I'm looking at. Analysts are seeing a 30% upside on Oneoak. So I have not done a lot of due diligence on them. But you guys know that I love some HESM. I
Yeah, the
am
oil and gas stocks usually have the high yields.
yeah. Yeah, this is a high yield stock. It's also got about a 15% upside according to the analysts. But man, I tell you, they talking about somebody who raises their dividend every quarter. Let's take a look at that.
Oh, does HESM do that?
Yeah,
That'd be very interesting.
look at that. Every quarter
Wow.
goes up every quarter. So and they're buying back shares, which so they got a nice high yield and they're buying back shares. They have some contracts, 3-year contracts in place with now Chevron, and what's kind of interesting is there is this potential now. Simply Safe gives it a 40, but we can talk about that if we want. But the I forgot where I was going with that.
The Kevin dividend safety score is like 100. But you're saying they had a potential of like a Chevron buyout, or
Yeah. So we're sitting here at $40, and Chevron decides to buy it back, which it used to be part of Hess, and then it spun off, and then Chevron bought Hess, but now Hess Midstream is kind of off in its own world. So if they buy it back, they're going to have to pay at least a 15% premium, maybe 20%. So, and I don't want that to happen. I think the growth that I'm seeing in Hess, especially in the dividend, is exactly what I want. But if they buy it back, they buy it back. So I wouldn't invest in it because of that, but I would invest in it because of the business itself.
They also don't give you a K-1 tax form, right?
That is correct. They are a qualified dividend. They use a Form 1099. So
wow. So if I own them in my taxable account, that income would be tax-free for me.
Exactly.
That's pretty good. I would put them on my high yield qualified dividend watch list. I really like HESM. That quarterly dividend growth is really impressive.
Yeah, I like them. I mean, of course, my target every year is 8%. So I look at this and say 7.36%. They have grown in value year over year over year, just, not just in dividend, but also just in stock price. So I get my 8% easy every year.
Your yield on cost is probably more than that, probably like 9 or something.
Yeah, exactly. So anyway, that's kind of fun. What else do we have here? Billy's 3 REITs are William P. Carey. I don't know what REXR is.
REXR is like a small Prologis. I believe another warehouse REIT.
I gotcha. And then
I don't know what FRT is. Is that
Federal Realty? Yeah, I think that's.
Is that like a bunch of government buildings?
I think so. Yeah. So those are good REITs, man.
Yeah, the government's your tenant. That's a good customer. Hopefully there's no budget cuts, but yeah, hey.
Yeah. And now Billy goes after a lot of dividend income, which is where he's at in life, and so those look great to me. Looks like you got some good REITs, my friend.
Yeah, and going into the lower rate environment, the REITs should have some appreciation theoretically.
Yeah. So Michael says that Hershey needs to buy its own cocoa production.
I agree, or that'd be a lot of money. But what do you think, Kevin?
Yeah, I think the issue I think with Hershey, first of all, Hershey buys off the open market. They made that decision long ago. They don't even do they do hedging contracts, but they do it in the open market. They don't do individual contracts with growers, and which is fine. But the problem is that cocoa only grows in certain parts of the world, and so getting like the Ivory Coast, for instance, is probably the most of where the cocoa comes from. There's also some, I think, in South America, some other countries in Africa. I think it's interesting that London is a place where they have like a risk mitigation. If something happens to the cocoa plants, they have cocoa plants in London that are available to start cocoa plants again if something happened. A big storm or whatever blows the cocoa off the map. Anyway.
That's interesting.
Yeah. I don't know, man. I don't know if that would be feasible or not, but if they could do that, I would agree. That would be a vertical integration approach. And
you're saying they could have done it a long time ago, but they're saying the smart choice was to not do that.
Yeah. One Oak. Oh, One Oak is the pronunciation. Okay. So One Oak.
Okay.
So it's not Oni Oak. It's One Oak. Okay. Well, Michael always is helping me out. Rexford Yeah. As a matter of fact, they that is it's like some. I'm familiar with them because they ran some commercials in Ohio where we used to live, and it's like where people would live, right? But it's more of a community where they would have facilities and their own shopping centers and stuff like that. So it's like more like a community. The Rexford community is what that was. So
Oh
that's that
wow.
REXR. So, well, man, we have made it past an hour. Now this is like light work for you. You're like usually 2.5 hour
Yeah.
kind of guy.
I had a great time. I really appreciate you having me on, Kevin. I do appreciate that.
I appreciate you being here. I'm really impressed with you, dude. I think you are going to do so well. I can't wait to see where you go in this area of not only investing, but also just business. And, if there's anything I can ever do to help you or answer any questions, I'm always available to you. So just keep up the great work, man. I'm really proud of you. I think you're doing a great job.
All right, thanks. I really appreciate that. And I'll reach out to you on your Discord if I ever need any questions. He's
Uh,
so helpful. He always answers everyone's questions if you ever have a question for him. Join Kevin's Discord.
Hey, that sounds great. I appreciate you saying that. All right, guys. Well, I think that's it for tonight. So we are going to go ahead and end the stream here. And I hope you have a great week. And I hope your investments do really well this week. So I'll see you guys on the next one.